Well, I think he's saying that there's division on the committee, which we kind of knew. But pretty clearly, when they meet, they also talk about the future and what they, are leaning towards in terms of future policy moves. And it seems pretty clear that there was nowhere near any sort of consensus that easing is on autopilot. And if anything, sort of reading between the lines, it sounds like the bias amongst the voters, at least, is in aggregate to sort of sit tight for a while. Not only did he say that December is not a foregone conclusion, but then he subsequently made some comment about resuming rate cuts in the future. Well, you can't resume unless you pause, right? Otherwise, you're just continuing. If they cut in December, they're continuing the cycle. If they pause at some point and then cut again, then they're resuming. So the fact that he said resume sort of is, use your context clues, is a suggestion that they're probably leaning towards staying on hold in 6 weeks, barring some further developments. And given that the market was basically fully priced for a cut, that's clearly trying to guide expectations towards their intent, I think.
So how are you interpreting the market's response here? I mean, we're seeing yields up, equities down across the board if you look at major indexes.
Well, the equity move, I think, has got a lot more to do with the micro than the macro, at least today. I mean, we had three big hyperscaler earnings releases after the close yesterday, and it was kind of like out of a Sergio Leone movie. It was the good, the bad, and the ugly. And right now, the bad and the ugly seem to be dominating.
So, what? I mean, the Fed is kind of like the rest of us a little bit, Cameron. They don't got a lot of data here. I mean, the Fed shutdown's really making it difficult for not just market participants to kind of get a handle on what's going on out there in the economy, but also the Fed. Does that also suggest that maybe they should just wait in December till they can get some more data?
Well, there's an argument to be made that, yeah, I mean, if we don't know what's going on, then making a decision to cut is sort of an active decision. You cut rates because you think that something has changed. Well, if there's no input or no convincing input to suggest that something has changed, then why would, the argument would be why would you act as if something has changed, particularly if you've now calibrated policy to a degree where you think it's not obviously super restrictive in aggregate. Obviously, the likes of Waller and particular Myron think that it's still really restrictive. But Powell sort of said in his press conference, we're now within the range at least where some people think we're pretty close to neutral. So that would be another argument for sort of sitting tight and awaiting further developments.
So let's talk about the health of the overall economy. How are you viewing and interpreting this corporate earnings season? Of course, we heard from some of the banks, then, of course, big tech right now. What do you think that this is all telling us about the state of the current economy?
Yeah, I mean, generally, it seems pretty reasonable, reasonably good. Powell himself alluded to the notion that before we entered this data vacuum, things were looking like they were turning up a bit. Nowcasts of third quarter GDP look pretty strong. So, you have to say that in aggregate, things have turned out or seem to be turning out better than one might have expected, given the sort of academic analysis of tariffs on the economy. And that is partially a function of the fact that the tariffs haven't been fully passed through. So, insofar as there's a risk that companies eventually are forced to bite the bullet and pass through more of their tariff costs onto the consumer, that perhaps is a risk moving forward. But woulda, coulda, shoulda. At this point, it's very difficult to forecast how that's going to happen. So you sort of have to take the current state of play as sort of your base case. And
Right.
yeah, things have held up better than expected.